Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi Singh. Welcome to our weekly podcast. Global equities remained volatile during the week after trending higher early in the week as sentiments improved amid optimism on the US debt ceiling negotiations. However, disappointing news from congressional negotiators later in the week and hawkish comments from US Fed Chair Powell on inflation trends and weak financial sector weighed on sentiments. Major global equity indices ended higher over the past week, with the MSCI World Index and MSCI Emerging Market Indices up 1.2% and 0.4% respectively. In the US, most major indices ended the week in green, with the S&P 500, Dow Jones Industrial Average, and Nasdaq Composite Index rising 0.6%, 0.4%, and 3% respectively. Back home, Indian equities capped a 3-week positive streak. The Nifty index opened the week on a positive note but traded lower amid profit booking by domestic investors and mixed global cues to end the week with a decline of 0.6%. Broader markets outperformed Nifty index with the mid-cap index up 0.3% and small-cap index up 0.9% for the week. Among sectors, realty and IT were the best performing sectors with gains of over 1%, while utilities and pharma were the worst performers with cuts of over 2% during the week. The Indian fixed income market had a stable week. The yield curve steepened as bond yields at the shorter end eased amid expectations of large surplus transfer to the government by the RBI, likely easing supply pressures over the near term. However, rising US bond yields kept the longer end of the curve largely unchanged. The 10-year Indian government bond yield rose 1 basis points to close at 7%, while the 3-year and 5-year Indian government bond yields fell by 6 basis points and 2 basis points respectively. Among other key updates during the week, the first one was in India's wholesale price inflation, which contracted by 0.9% year-on-year in April 2023, recording the first wholesale price deflation since July of 2020. The moderation was driven by a further drop in cost of manufacturing, predominantly basic metals. At the same time, cost of fuel and power rose at a softer pace. On a monthly basis, the wholesale prices were unchanged in April from the previous month. The second update was on India's trade deficit, which narrowed further to USD 15.2 billion compared to a deficit of USD 19.7 billion recorded over the previous month. This reading was the lowest since August 2021, driven by notable declines in both imports and exports amid weakening global demand, driven by persistently high inflation rates and increased borrowing costs. Imports fell 14.1% year-on-year, reaching a 20-month low of USD 50 billion. Exports also experienced a decline of 12.7% year-on-year, amounting to USD 35 billion. The third update was on India's FX reserve, which inched closer to the $600 billion mark. As per the Reserve Bank of India's statistical supplement released on Friday, India's foreign exchange reserve grew for the third straight week and reached USD 599.5 billion for the week ending May 12, recording the highest level since early June of 2022. FX reserve rose USD 3.5 billion from the prior week and USD 11.7 billion over the past 2 weeks. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.